Palantir is up over 250% year to date, and a lot of investors are asking me if it's too late to buy this stock. Even though I think this is one of the best AI companies in the entire planet, I wouldn't be buying Palantir for over $60 per share. I would be buying Leap options instead. I'll show you how to buy shares of Palantir, or essentially get the same benefit as owning shares for a lot less money and still get all the upside with less risk up front. So rather than buying shares at all-time highs, it would be a much wiser move to buy Leaps instead. So in this video, I'm going to give you the full blueprint on buying Leaps and show you some examples. All right, guys, so Palantir is at $61 per share. I'm up a whopping $200,383. Guys, my current average cost of Palantir is $21.71. And I have $311,000 in capital here from this portfolio alone in Palantir. Now look, I'm going to be giving you guys some examples of the Leap options I'm going to buy. But first, I want to say that billionaire Ken Griffin of Citadel, I was looking at the research because look, guys, there's something called the 13F, all right? A 13F, essentially, I'm looking at my notes here. It's a required filing from the Securities and Exchange Commission, right? From the SEC for institutional investors with at least 100 million in assets under management. So if you have a lot of assets under management, you're a hedge fund, you have to report. And Ken Griffin, the billionaire, he reported that he added over 1,000% to his position on Palantir. That means this billionaire has noticed that Palantir is a good AI play. That's most likely why he purchased it, right? I can only make speculations here, right? And this tool, by the way, this 13F filing, it's exactly what some of the people look at when they want to follow one of the, some of the smartest money managers out there. The 13F filing is a tool that the smartest money managers basically, you can see exactly what they're doing. There's full transparency because they have to be transparent. It's not that they want to, it's that they have to. So I was doing some research here, and billionaire Ken Griffin of Citadel, one of Wall Street's biggest success stories, essentially has bought a lot of Palantir. So I'm super bullish on Palantir, but as I've mentioned in the beginning of this video, I don't know if I would be buying shares at this level. I'm definitely not selling shares by no means. I'm still bullish, right? But I'm going to show you a better strategy. So I'm going to go to trade Palantir options, and we're going to actually be taking a look at several different positions for Leap options and how to manage those leaps, how to open the leaps and basically close the leaps. I'm going to give you lots of different ideas here. So make sure that you pay attention to all these examples. The first example is I would probably go for something like October 17, 2025, okay? Very far into the future. Honestly, I think Palantir is going to have some upside, but will it be $100 next year? I don't know. I actually think there's a good chance that if I had to make a bet that Palantir, it's gone up a lot, 250%, guys. That's like NVIDIA-like returns. But I still think we can squeeze out some more gains. I do think this stock will easily be over $100 per share, just not sure on the timing. I don't want to lie to you and promise you, say, hey, I know, because I don't, okay? But I do think this is a smart strategy right here because specifically a Leap option gives you that benefit of owning 100 shares without owning 100 shares. You actually get the same benefit because when you buy a call option, each call option represents 100 shares. Therefore, if I were to buy a $60 call option like this right here, it is going for $15.85, which is $1,585. Not cheap, but also it's not as expensive as having to buy 100 shares of Palantir, which would be over $6,000 right now. Pretty insane, right? I mean, I bought this stock at $21. That's my average price. That's when I recommended this to my Discord community. By the way, my Discord community is the first link in the description. You can go through the quick, simple process. We actually don't have any spots right now. I have a lot of demand for the coaching, but once we have spots open up, then go ahead, check out the Discord link. And I also have one-on-one coaching, which is also full at the moment. So yeah, it's kind of crazy. $60 call here. I would purchase this for 2025 and it gives you a lot of upside. You can see how you start off in the red. Now, why do you start off in the red? Well, there's always a give and take relationship with all things in life, right? With whether it's like, romantic relationships or money or business or really anything, right? There's always a give and take in life. Whatever we want, we have to pay for, right? Is it physically or mentally or financially, etc. When it comes to option trading, if you want to own 100 shares of Palantir and you don't want to pay the $6,000, you want to pay a fraction, you will have some break-even cost, okay? There's going to be some cost here that Palantir has to go up for you to break even. I'm going to show you a little loophole, a little bit of a trick on how to reduce that break-even and get it lower in just a little bit. But essentially, when you buy a Leap option, yes, Palantir does need to go up more than just owning the shares, right? With the shares, you get immediate benefit. With the Leap option, I'm just being upfront and transparent with you. You need it to go up a little bit more, right? To break even. That is the cost that you pay for owning a Leap option. Now, I'll show you how you can actually reduce the cost of the Leap option and basically make it a lot cheaper. You know what? Let me just show you one more example before I show you how to reduce the cost, because it really depends. If you want to go October, that's a long wait. You can actually also go for a little bit of a shorter strategy here. You can go for May, which is 180 days, okay? About 180 days, about 6 months. This would be half a year. And you can make this a lot cheaper by just going for like a 70 buy call option. Now I'll also show you how to reduce the cost here as well, because in both scenarios, so here's some foreshadowing. I'm going to be selling call options with the buying call option. So I'm going to buy 2 call options. I'm going to show you 2 examples and then sell 2 call options. I might show you 3 examples. We'll see. So look, 70 call option, you buy, it's a lot cheaper. I'm giving you lots of options. I'm giving you all the bullish strategies that I know in this video because there's just so many ways to make money on Palantir. Actually, every single video I've made, guys, has literally made like double-digit returns per month. All my students right now are making double digits per month. It's the easiest time in the market to make a ton of money. Like if you're not making 8 to 10% a month right now, you're doing something wrong. Like it's just not enough. Right now, there's just crazy amounts of money to be made. And like I showed you a few days ago, I made over $300,000 in a month. It's a little less than 10% return, eight something return on my, almost $4 million portfolio. There's just crazy amounts of money to be made right now. So you should be doing something like in this example, you buy the 70 call and then you can sell, I would go 80 call, okay? Now, typically I recommend $5 with spreads, but straight up, there's a lot of upside, and I do think we could see $80 per share on Palantir by May 16. That would basically be my base bull case, okay? If I had a bull case, I would say we're gonna be at about 80 per share on Palantir. So when you take a look at this, you're gonna be putting up about $260 in terms of the cost, but you have $750 profit. You can turn $260 into $1,000. That's a 4x return. That's 4 times your money. You could put up $250 essentially, and your total max gain would be the 80 minus the 70, which is $10. So you're putting up 2.5 to get 10. That's a 4x return. So you can literally 4x your money in 6 months if Palantir goes to 80. That's a little bit of a riskier bet. Like for the most part, I am sticking to selling put options, guys. That is safer. But in this market right now, especially if you're bullish and you want to make a bet on Palantir, I'm going to actually make a different bet. I'm just showing you this example because I think this is a good example if you're very bullish on Palantir. I am more moderately bullish. I'll show you 2 more examples. But in this first example, if you're very bullish, this is what I would do because you can 4 times your money right here. And essentially, even if you put up, let's say a small amount of capital, like 2.5K, you can get to $10,000. So you put up $2,500 to get to $10,000. And if you, spread your risk and you have all the other stocks I'm talking about, which have been making tons and boatloads of money, right? Amazon, Google, you name it, Nvidia, all these stocks are basically, I'm just printing money literally right now. You should have diversification, obviously. You should have 10 to 15 positions. As usual, I'm not going to be changing anything that I say, right? I'm sticking to my plan, sticking to my strategy. I could actually be making way more money right now if I was buying call options, but I prefer steady passive returns. I'm always going to go for, I always say I'd rather have $1,000 a day than, $15,000 one day and then, or, 1 week you have $50,000 week and then the next week you lose 10 grand. Like there's no point of that volatility. I don't personally like that roller coaster ride at all in any areas of my life. Financially, I don't think it makes sense. So not that it makes sense in any part of life, right? So I would say that I'm always going for steady passive returns. This strategy right here would be a fantastic high growth strategy, but let me show you the leap strategy I would prefer. I would say the leap strategy would be much better. So going back to the leap strategy, so let me go to October expiration again, and let me show you buying a call option that was a little bit more expensive, right? This 60 call option. So this was fairly expensive, right? $1,500, which is a lot more than the $250 I showed you. But this position does have some advantages. So if you are going to buy this call option, and then you sell some shorter term call options, you can essentially turn this leap option into a poor man's covered call or a covered call, right? So this is a much better leverage strategy. And I would say that if you're not, in the 6-figure range, if you don't have 100K, 300K, 500K, those are typically the students I work with. Someone who has 100K is easily able, I can work with someone even with 50K, but the bigger portfolio you have, the less need you would have for this strategy. The smaller portfolio you have, the more you would need this strategy, or the more aggressive your risk is and the more aggressive of a return you want. If you just want to make more money, this would be literally the strategy. This would be the strategy to use on Palantir, okay? This, in my opinion, would have medium risk. It would have some medium risk, whereas the other option I just showed you, that bull call spread I just showed you, would be pretty high risk, right? Because if Palantir doesn't really go to 80, you don't get the full benefit. You would really need Palantir to go up a significant amount. Now, with this leap option, you actually don't need it to go up a significant amount. You just need it to steadily go up, and you will actually make pretty good money. The way you would do this is you can go ahead and sell a 70 call option. And right here, you'll see that this is a very interesting chart. I'll zoom in here. You can see this is a very, very interesting chart. Essentially, this is a bullish strategy where you actually are very, very incentivized if the stock were to go up a little bit up to 70, right? At 70, you would really hit that sweet spot of a really high return. So at $70, you would essentially make, in the short term on this option right here, it would definitely swing in value. It is hard to say exactly how much it would swing in value. I'll give you my experience, okay? This option is expiring in October. If Palantir swung up to $70 in the short term, I'll tell you how these two options behave, okay? Now, this is going to be some deeper level stuff that no one really talks about because they don't understand options to the degree I understand. I've been doing it for 10 years. Look, the long call option has low theta. It has very low theta because the option expires in such a long time, right? It's expiring in 11 months. Theta doesn't really kick in super hard until the last 30 days to 60 days, okay? Some will say 90 days, but it's really in that 30-day last period. You have a lot of time decay, right? It makes a lot of sense because the option, as it approaches expiration, the time decay increases in speed. So that's how that call option will work. Whereas this call option right here, you can see the 70 call option, this will decay a lot faster. Okay, and there's also another factor. This one has high delta value. This is a very high delta because it's an in-the-money option, okay? And the delta is over 50% here. I know it's over 50% because an option that's at the money, that's exactly at the money, is going to have a 50 delta. That means, okay, that this option has a lot of sensitivity. It's very sensitive in a good way, okay? So when Palantir rises in value, this 60 call option will increase a lot in value. So if Palantir goes up by $10, this 60 call option will experience about a $6 move. How do I know that? Well, because the delta is roughly 60, it's probably 55 or so, okay? And if Palantir goes up by $10, this option will go up by the 60-ish delta, so 0.6 times $10, which is $6, okay? So this option will no longer be $15.85. It'll be about, $16 plus 6, which is $22, okay? This will be about a $22 option, okay? Because the Robinhood's not going to explain to you how much money you're actually going to make. That's why I'm explaining this to you, because this chart doesn't show it, okay? This chart doesn't really show you your max true profit. It doesn't. It says 750, but no, that's not really correct. It's close, but it's not correct. So for poor man's covered call, it's a little bit harder to calculate because there's two different options that are expiring in 2 different days. So technically, if you really want to understand this on a deep level, it is a little bit more complicated. It doesn't have to be. I'm just giving you all the details and all the background of it. So if you appreciate my full explanation, I would love it if you would subscribe to this channel. We're trying to hit 500,000 subscribers and we're trying to grow our family and just make millions of dollars together as a collective group. I've been right on point and I have not sold out and I have not made videos on stocks that I don't believe in. I only cover the real stuff and I transparently show you my portfolio. We've been on a good journey here. So let me shut up and let me keep going here. A 60 call here, okay? This is going to be very sensitive, all right? So if delta is sensitive, 60 delta is very sensitive, it's a high delta, we're going to get a lot of good upside. So at $70 per share, we're going to make $6 here on this option, okay? This option right here. Now on the 70 call, if Palantir just goes to 70, this will be worth 0, okay? So you will make the full premium because theta will absolutely demolish and destroy the 70 call option. So it'll be destroyed, which is a good thing because you've sold it, so you want it to fall in price. This option will go up, this option will go down. Beautiful, like freaking fantastic, right? So this 70 call option will lose $250. This will gain 6, so you're going to make about $850. Now this may lose a little bit of theta, so let's just call it $800. So that's why I said this is close, but not quite. You'll make about $800. So $800 that you can make, and you're putting up about $1,300 in this position. So, if I were to do the math, and I'll quickly do 800, all right, so we'll take 800 divided by 1,300. That's a 60% return, folks. 60% return. That's a fantastic return. Palantir can move up by $10, which would be roughly an 18-20% return. You're going to get 60. So with this leap strategy that I'm showing you right now, you're essentially getting 3 to 4 times leverage factor. You're getting a huge upside factor, and it's just I would say it's freaking fantastic. And I'm recording this video late in the evening because I want you guys to make money. This is the easiest time ever to make money. And I'm tired, but I'm still creating this video. And I'm actually going to tell you some more important things about Palantir, okay? What I think, I mentioned Ken Griffin, okay, earlier in this video. What I think Ken Griffin really noticed, by the way, and the reason why he actually pulled the trigger and bought a lot more Palantir, because I took some research here. I've spent hours of research. What I think Ken Griffin is doing was that he noticed that Palantir had the best quarter ever. Since Palantir had the best quarter ever, Ken Griffin said, this is an obvious AI play. Like, he's not stupid. The guy's not stupid, okay? He literally realized that Palantir reported third quarter adjusted earnings, okay, of 10 cents a share on revenue of $725.5 million. And they beat the consensus. The consensus was $705 million. So they beat by over $20 million. That huge beat is not unnoticed, guys. When a company beats earnings, there's a reason why that stock pops a lot. It's because there was one expectation and something else happened, okay? When reality hits differently than expectation, we have shock and there's emotion, and that emotion drives the market, okay? I'm sure you can think of lots of different experiences in your own life where expectations were different than reality, and you're like, in a bad way, or in a good way. And that's exactly what Ken Griffin saw, because expectations are over 20 million. And I think I was looking at the research in the same period last year. The company reported, Palantir, and I've said this in prior videos, guys, this isn't anything new. I'm just showing you how to make more money because there's still more opportunity in this. I'm going to keep making videos as long as I see opportunity for us to profit. And if I don't see opportunity, I'm still going to tell you that I don't see opportunity. I'm going to be straight up honest with you. You go, I don't sugarcoat anything. I don't need to. I have enough money. I'm doing this because I want to. I think there's so much opportunity right now that it's crazy to ignore. Last period, they had 7 cents a share on revenue of $558 million. We're going to $1 trillion in revenue for Palantir. So I'm extremely bullish on the stock. I'm also extremely bullish on the commercial sector. There's a lot of use applications for Palantir. Let me actually show you Palantir's chart a little bit. I think that we've seen lots of reactions, and over the past year to date, I think a lot of investors here, they weren't expecting Palantir to have a huge commercial use, okay? We know that Palantir has been trying to go away from the government contracts because government money is good, don't get me wrong, but if you want to get to the $1 trillion valuation, you have to be broad. You have to help government, you have to help commercial, you have to help everyone, right? You need as much revenue as possible. To become $1 trillion company, you have to have truly large impact. Well, I don't think that's going to be a problem for Palantir with AI. AI is going to be, I forget what the research was showing, but it was like trillions of dollars. It was like 15 trillion by 2030. Okay, AI is so interesting, guys. It's going to change the way we live. It's going to change the way our work is. It's going to change everything. And Palantir is at the forefront of that. And I'm really behind this stock. I know I've said the CEO went to my high school. That's actually how I learned about the stock, because word went around that Alex Karp went to Central High School in Philadelphia, where I grew up. And, that's kind of what got me interested into the stock. Okay, I'll be honest with you. I didn't know that this was going to be the best stock from day one, but I really got behind it because I knew the leadership was good. Guys, it's all about the person, okay? Do you trust the person? Okay, I trust Alex Karp. If I trust the CEO, to me, it's half the battle. It's already half the battle. Okay, the rest is market research. I want to make sure they have a good competitive advantage. I want to make sure they have a good product, but I know they do because of the CEO. So look, this is a crazy stock that continues to go up. I would personally use leap options on it. I'd be a little bit cautious on buying shares right now, but if the stock pulls back, I will also be selling put options on it. So thanks a lot, guys. My coaching is full. I'll do my best to open up some more spots. I wish you guys lots of success, health, enjoy this market. And if you want to watch another video, and if you want to keep leveling up, check out this video right here on my channel.